All right, everybody, stop what you are doing because Congress just did something insane. And no, they did not balance the budget. They did not fix healthcare, but they did accidentally drop the most pro-Bitcoin market structure bill in U.S. history. The Senate Agricultural Committee, yes, the people who regulate corn, have now written the cleanest federal Bitcoin framework that we have ever seen. Now, this is brand new breaking news right here, and I pulled up the bill and it's 155 pages. But luckily, I have skimmed it just for you, and we are gonna go over why this is so important for Bitcoin adoption and why this news is massively bullish. This thing defines what a commodity even is. It puts Bitcoin squarely in the commodity bucket, and it hands the spot market to the CFTC, and it basically says, hey, America, maybe this Bitcoin stuff is legit after all. We're talking digital commodity exchanges, qualified custodians, retail protections, the whole regulatory plumbing that the institutions have been crying about wanting for a decade. This is the first serious, credible federal attempt to actually formalize Bitcoin's legal status in the US. And you're going to see why this bill from the Senate Ag Committee of all places might be the spark that accelerates Bitcoin adoption by years. Let's get into it. This bill does not hint at Bitcoin status. It does not dance around Bitcoin. It doesn't say, well, maybe, sort of, or potentially, depending on Gary Gensler's mood. Remember, he's gone. This bill is codifying that Bitcoin is a digital commodity, full stop. And this is the wild part. That means that Bitcoin is excluded from SEC securities treatment. That decade-long legal purgatory that we were in, gone. Remember the debates that Bitcoin is not a security? Those debates are dead. The Twitter fights, okay, those will still continue, but still. This is the first federal real recognition that Bitcoin belongs in the same category as gold, oil, and other commodities. It is not a security. It is not an investment contract. It is not something that you need to lawyer up to hold. For corporations, for pension funds, for insurance companies, for banks, this is the regulatory oxygen that they've been waiting for. They've been stuck on the sidelines for years because nobody wanted to be the first big institution to get sued by the SEC for touching Bitcoin. But this bill is basically Congress saying, hey, you're good. Bitcoin's a commodity. Go ahead and buy some. This bill officially takes Bitcoin from experimental tech asset to federally recognized commodity class. And once you enter that category, it is game on. Institutions no longer need the legal gymnastics. The CFOs out there no longer need Xanax to put Bitcoin on their balance sheets. Everyone finally knows the lane that Bitcoin sits in. This is the first major federal step up toward making coin official in the eyes of the US financial system. And trust me, this one is going to age like very fine bourbon. All right, now here's where things get a bit spicy because this bill doesn't just define Bitcoin as a digital commodity. It goes full HGTV home renovation mode on the entire US spot market. We are talking, welcome to your new kitchen. We gutted the whole thing. The rats are gone, and now everything is stainless steel. For the first time ever, exchanges actually have to register with the CFTC as digital commodity exchanges, which means that we're finally getting #1 market integrity, aka the government saying, hey, crypto, maybe try not running your exchanges like a Dominican blackjack table. We're talking real surveillance, monitoring systems. No more, we didn't notice the $3 billion hack because Gary was on lunch break. The custody standards, and this is huge because institutions have been terrified of crypto custody for over a decade, and now the bill is saying, relax, we have installed the seatbelts. Strict requirements, qualified custodians, the whole 9 yards. Basically, Wall Street's anxiety meds just kicked in. Conflicts of interest, and this one's funny because it basically says, hey, exchanges, maybe don't front run your own users. Wild concept, I know, but there are clear rules, real oversight, fewer shenanigans. Your move, shady offshore exchanges. And this is the one the corporate lawyers have been begging for, the listing procedures, transparent, predictable listing standards. There is no more, hey, is this token a security? I don't know. Ask the SEC. The SEC sued us though. Ah, well, tough. This is real structure, real clarity, real rules. So the bottom line is that this gives Wall Street ETF level comfort in the plumbing of Bitcoin spot markets. And the reality is that clearer markets equal more liquidity, more trust, and way more institutional capital flowing into Bitcoin. This is the regulatory infrastructure that you build right before the capital floodgates open. And this slide right here might be the most important one in the entire presentation because this is where Congress basically looked at Bitcoin and said, fine, you weird internet libertarians, you can keep your keys. For the first time ever, according to this bill draft, federal law explicitly protects your right to hold your own private keys. Use hardware or software wallets and transact peer-to-peer. Yes, you have heard that right. Congress, of all people, the same institution that can't pass a budget on time, just enshrined self-custody into law, at least when it finally passes. So let's break down how wild that is. Number one, individual sovereignty. This is Congress acknowledging one of Bitcoin's sacred principles. You get to hold your own money, no bank, no middleman, no permission slip. That is the kind of sentence that Satoshi would print on a mug. This means that Bitcoin is future-proofed from the inevitable regulatory creep that always shows up when institutions start to buy something. Because you already know the playbook. We love Bitcoin now, but maybe you peasants shouldn't hold your keys. Well, tough luck. This bill slams that door shut. And number three is core integrity, and this one is huge because as the institutions will pile in, Bitcoin's decentralization stays protected at the federal level. That means Bitcoin doesn't get watered down, it doesn't get privatized, captured, or neutered. The system's integrity stays intact no matter how much TradFi capital flows into it. In plain English, this bill helps to protect Bitcoin's soul. It guarantees the thing that makes Bitcoin Bitcoin. And we all know that Bitcoin doesn't need the federal government. However, this helps make sure that Bitcoin does not get trampled in the stampede of the coming institutional adoption. And honestly, I didn't have Congress defending self-custody on my 2025 bingo card, but here we are. Here's the deal. FASB accounting rules already fixed the accounting nightmare. Fair value treatment means that companies can finally mark Bitcoin up instead of treating it like radioactive waste. Now this bill adds the missing piece, which is regulatory clarity. The corporations, these guys are now cleared to adopt Bitcoin as a treasury reserve asset without triggering a full-blown SEC heart attack. Remember, this is how Strategy went from some mid-tier software company into a Bitcoin Death Star, and now the path is open for everyone else who would be a little more scared than Michael Saylor was. When we talk about the pension funds, these are long-term, very slow-moving capital. They don't buy anything unless it has regulatory seatbelts, airbags, and a warning label, but now they have all three. So expect these to start quietly exploring Bitcoin allocations for multi-decade growth. And when it comes to insurance companies, I know that you guys have seen me talk about how Bitcoin is going to eat the insurance industry because they only buy things that survive nuclear war, and we all know that Bitcoin survives that. So this bill gives them the green light to use Bitcoin inside long-term financial structures. Think annuities, think long-duration liabilities and capital reserves that are backed by BTC. We're going to start to see trillions of dollars creep into Bitcoin slowly at first and then all at once. Corporate America just got permission to enter the arena of orange glory. And this is where everything comes together because once you define Bitcoin as a digital commodity, once you give the CFTC spot oversight, once you protect self-custody and clean up the exchanges, that's when you unlock something way bigger, and that is Bitcoin financial rails, actual infrastructure. The stuff that lets trillions of dollars move through Bitcoin without anyone sweating through their suit jacket. So let me show you what this opens the door to. Number one is Bitcoin-backed credit. We're talking lending markets collateralized by BTC, not just Strategy and Strive, not shady offshore lending, not degen casino loans, but institutional-grade credit products. So imagine mortgages, imagine business credit, imagine corporate facilities all collateralized by Bitcoin reserves. Treasury strategies, think companies that can finally earn yield on Bitcoin reserves without breaking 47 compliance laws. Think income-generating strategies, liquidity ladders, treasury optimization. Basically, Strategy is about to get copycatted so hard, it's gonna feel like identity theft. You gotta think about the money market equivalents, okay? Bitcoin versions of traditional money money markets that are safe, they're liquid, they're boring, but remember, they are institutional, and that is how trillions in cash and shorter-term capital get comfortable parking themselves next to Bitcoin. Think of corporate settlement too, where direct Bitcoin settlement for business transactions is now getting clarity. There's no wires, there's no intermediaries, there's no Fed blackout windows. This is instant, this is global, this is final. Corporations will be able to use this simply because it's better. And we're going to see the long duration financial structures just get collateralized with Bitcoin because Bitcoin is the apex collateral, the insurance, the annuities, the loan products, all of the slow, conservative financial machines. They're suddenly going to discover that Bitcoin isn't a toy, it is pristine collateral. And this is the most important line of this entire presentation. This is the infrastructure phase before hyper adoption. Exactly. This is the scaffolding, the rails, the regulatory foundation that is going to let the hundreds of trillions of dollars of trapped capital of the capital markets flow directly into Bitcoin with an on-ramp that doesn't blow everything up. Bitcoin is getting the US legal architecture that it needs to go from a niche asset to the backbone of global finance. Now, you are still early, but not for long. And if you're watching this thinking, I want exposure before this shift happens, now is the time to do it the right way. The Swan private team works with high net worth families, individuals, and companies who want to build generational Bitcoin positions safely, securely, and strategically. We help clients understand the macro forces that are driving this new transition and how to own real Bitcoin and not paper IOUs. Because the goal isn't to trade the next crash, it's to survive and thrive through all of them. Visit swan.com/no-second-best to learn more. And if you want more daily Bitcoin insights during the greatest wealth transfer in human history, subscribe to the channel, like the video to help the algorithm, so you can help us spread the orange gospel to the masses. Have a terrific day. Do not party too hard. Class dismissed.